Costco stock recently reported their earnings, and the market's reaction was cooler than a soft-serve ice cream from their food court. So is now still the time to buy Costco stock? Hi, I'm John from ValueGlance.com. I have a PhD in theoretical physics. I worked as a research analyst on a 10-figure fund, and I'm the author of Stop Checking the Price, a book where we explore a strategy to find high-quality stocks that compound for the long run. Today we're going to talk about Costco stock, ticker COST. Now, the nonsense news headlines have focused on Costco extending their store hours, how the company is handling price inflation and the uncertainty around tariffs, as well as the company now offering discount weight loss injection drugs. So as long-term investors, we don't have to get caught up in these headlines, and instead we can look at long-term fundamental trends of key metrics to analyze Costco as a stock. So let's start off by taking a look at profitability. So here we are at ValueGlance.com and we're looking at Costco. And this is data over the last 10 years. So we're looking at the ROIC in blue and the weighted average cost of capital, the WACC, in orange. Now remember, we want a high, steady, and increasing ROIC. The ROIC and WACC set the bar for value creation. And so when the ROIC is above the cost of capital, the company is creating long-term value. That's our key quality metric over the long run. And indeed, we see Costco over the last 10 years, and even if we zoom out, has maintained a high, steady, and even increasing ROIC. So that's a great sign for quality. If we go down here and plot the invested capital over that same time period, here we can see this is on a log scale. When we zoom in even over the last 10 years, we see the invested capital has indeed been increasing. It's about 8% annualized growth, 8% CAGR, which is good growth. It's not explosive up and to the right growth, but it is heading in the right direction while the ROIC is steadily above the WACC. So not only is Costco a high quality business, it is a compounder stock. It is able to reinvest those profits into growth that will create long-term value. Now, it's no surprise that Charlie Munger said, "I love everything about Costco. I'm a total addict. I'm never going to sell a share." It's no wonder. Costco has a large and loyal membership base, which can be used to negotiate strong prices with suppliers, which can be used to offer discount prices, which can be used to help protect Costco against a recession because they have that pricing power. So no matter how you slice it, Costco is a fantastic business, and we see that directly in the numbers. But what about the value? So while the late Charlie Munger never planned to sell a share, we can ask the question, is Costco still a good buying opportunity at today's price? In particular, does the great quality of the business justify the current hype levels? So here we are again at ValueGlance. And so what we're plotting here again over the last 10 years is the hype factor in green and the equilibrium hype in pink. And so the hype factor is, we can think of it like the acquirer's multiple that the market is willing to pay for the company's invested capital. So for a 10x hype factor, that means the market is willing to pay $10 for $1 of invested capital on Costco's books because Costco is able to take that invested capital and put it to work with a great business model. But what we notice with the hype factor is that it has been increasing and indeed exploded up here. We see late 2023, 2024, hitting new historical highs. It has in the past few quarters come down here. We can see it's cooling off, but it is still well above that long-term equilibrium value. And we see the latest values of the last quarter, 11.4x hype factor. So that's still historically high compared to what we've seen despite the high quality of the business. Now, a high hype factor does not necessarily imply a bubble that's going to burst and a price that's going to come crashing down. We've seen in the past that a high hype factor can also mean that the market has baked in very high expectations for the future growth and future growth of profits for the business. And so what can also happen in this scenario is slower growth as the company needs to reconcile its growth rates of profitability with investors' overhyped expectations. And so that slower growth just means the company is catching up to those expectations. Now we can also go ahead and plot free cash flow yield. And so free cash flow yield is telling us how much cash, in terms of free cash flow, the business is generating for a given share price. And so what we see as of last quarter, about a 1.9% free cash flow yield. So the company is generating $1.90 of free cash flow for $100 worth of share price. It's not the greatest yield, and it's not exactly a super money printing machine. But as we've seen in the past, companies can have a low free cash flow yield and still be great companies if they are constantly reinvesting that cash to create long-term value. And indeed, we saw with the invested capital of Costco that is still increasing. The company is putting capital to work, growing, compounding the business. So low free cash flow may not necessarily be a bad thing here. However, we have to keep in mind Costco's size and Costco's scale. It gets harder and harder to move the needle the larger the company is, to find those opportunities where invested capital can still be put to work and generate a high ROIC. Those opportunities become more limited as the company continues to grow. And so that's something to consider with Costco's hype factor at these current levels. Now remember, no one can predict the future, especially in the near term. But by looking at these long-term trends of key fundamental metrics, we can avoid the hype and the nonsense news. So invest for the long term and keep compounding knowledge.